First, the trauma that came with the fires, now a new stage of grief and recovery.
Have you received any money from your insurance company?
Zero.
Frustration, confusion, anger, and exhaustion as fire victims battle with their insurance over claims from smoke damage to total destruction.
To them, we are a faceless policy number.
California has been dealing with an insurance crisis that continues to worsen.
There's real people behind those decisions. And it's disappointing to see companies forget that.
For the next hour, we'll look into some of the biggest issues people are facing and what you need to know to protect you and your family.
Welcome to a CBS LA special, Home Insurance. We've got you covered. I'm Christine Lazar.
And I'm Julie Watts. For months, we've been investigating and reporting on various insurance issues plaguing our state, from those arising out of the Palisades and Eaton fires to people struggling to get or keep their insurance.
We've called on our leaders for answers and seen firsthand the bravery and resilience of those fighting to try to rebuild their lives.
We begin with some of the legal battles we've seen since the fires. People are so tired of fighting with their insurance companies. They're taking their battles to court.
Many Palisades and Altadena homeowners tell us they no longer feel lucky their homes survived. In one case, a homeowner claims the California Fair Plan offered to pay him about $6,000 for a job that will cost six figures. How did this backyard used to feel?
Home.
This is what Luis Cesare's backyard in Altadena used to look like. It was home to countless family parties over the 18 years the landscaper lived there. But after the Eaton fire destroyed every home that surrounded his property.
And take a look. That's where I park my cars, my tools, all gone, all the way around the house.
The fire ripped through the backyard. Did it burn your roof too?
A little bit.
And even burned the corner of Cesare's house. But that isn't the worst of the damage. A huge portion of his roof collapsed in this covered patio. So the ceiling just collapsed?
Right. Every piece of, every so often I come over and there's another chunk on the floor.
Also in one of the bedrooms and in the dining room, which used to look like this. Cesare's is insured by the California Fair Plan, our state's insurance of last resort. And when he filed a claim, he was told he would only receive $6,995 for all this damage done to his house.
When I hear the insurance give me that money, that's another catastrophe.
The Fair Plan quote lists another $64,000 for the loss of backyard structures, including sheds and a pool house. Is that enough to
Of course not.
fix all of this?
No, not even a scratch.
What are you hearing from contractors that you've had out?
One that I called out and came out gave me an estimate of $250,000 for the repairs that the adjusters said that they were going to be doing.
Cesare's also has smoke and ash throughout the home.
I asked the desk adjuster if they were going to be paying for my beds or my sofas inside, and he asked me, are they burned? I said, no, so we're not paying for them. And I said, what about the walls, the cleaning inside the house? That you can do yourself.
I mean, you can't be acting in good faith here and not pay this man his full policy.
Kylie Grombacher is Cesare's attorney. She's filed a lawsuit on his behalf, accusing the Fair Plan of acting in bad faith and for breach of contract by failing to pay all benefits due for covered claims in violation of California law.
We think his whole policy should be paid.
And that's how much?
It's $500,000. You know, his policy isn't even that much. You know, just that will, give him a chance to rebuild. It's not going to be enough, probably, but at least he has a fighting chance.
Until then, Cesare's is staying with relatives and dreaming of the day he can return to the place he once considered his sanctuary. We reached out to the California Fair Plan for comment, and a spokesperson told us they cannot comment on ongoing litigation. But they said the Fair Plan pays all covered claims consistent with California law.
Well, there's a lot we don't know about the California Fair Plan, but the Fair Plan secrets haven't been that big of a deal for the last 50 years or so because the Fair Plan was small and private insurance companies covered its debt. Well, now things are changing. The Fair Plan is growing, and those of us who don't have Fair Plan insurance are suddenly on the hook for its debt. So now Fair Plan secrets affect us all.
Oh, it's been horrible. It's so painful.
Just down the street from Helen Meisel's Pacific Palisades home, the neighborhood is unrecognizable. Meanwhile,
Do you feel lucky that your house is still standing?
this is where Helen lives.
I have mixed emotions.
Just months before the LA fires, Helen got her insurance renewal letter.
If you do have a mortgage, you need to have the insurance.
State Farm would no longer offer her fire coverage. For that, the State Farm broker switched her to the California Fair Plan, which covers far less than regular insurance and costs a lot more.
I'm paying 2 policies, more than double.
California is one of more than 30 states with these fair or fair access to insurance requirements plans, intended for people who can't get coverage anywhere else. To understand California's Fair Plan, we have to go back to the 1960s. After the Watts riots, insurers felt urban property was getting too risky to cover. So California lawmakers created the Insurance of Last Resort. It offers bare-bones, high-cost policies for homes in high-risk areas. Fast forward 6 decades, the highest risk in California has shifted from riots to wildfires.
The reason all of us should care is that we're now on the hook, all of us, in case the Fair Plan runs out of money.
Which it did, which it has.
That's right.
Former California Insurance Commissioner Dave Jones explained so far the Fair Plan says it needs at least $1 billion more than it has to cover the LA fires. And thanks to a controversial executive order that took effect just days before the fires, people without a Fair Plan policy will pay to help cover that shortfall with a one-time fee on their insurance bill.
I think it's going to come as a rude awakening to many Californians.
He explains every insurer in California is required to be part of the nonprofit association of insurers that independently runs California's Fair Plan. In good years, the insurers can make money, paying themselves dividends from the Fair Plan reserves. But if those reserves run out of money, say after a big event like the LA fires, then every insurer is charged an assessment to cover the cost of the claims. And now anyone with any property insurance will pay to reimburse their insurer to cover the costs the Fair Plan can't cover.
So since we're all on the hook, we ought to be able to see what's in those financial statements.
But we can't. Or we couldn't until CBS News California started investigating Fair Plan secrecy. You see, the California Fair Plan is the only insurer in the state that doesn't have to publicly disclose its financials. Its board meetings, minutes, audits, and reports are private. They even refuse to reveal who's on the Fair Plan's 9-member governing board. What do you say to the argument that since we're all on the hook, we ought to be able to see those financial statements, we ought to be privy to the executive board meetings? Rex Frazier represents the insurance industry.
You can understand how someone would have that opinion, but that's not the law today.
He explains the Fair Plan is not a state agency. When lawmakers created it 57 years ago, they specified that reports, records, and communications would not be public documents.
They are not a governmental entity.
No, neither are the other Fair Plans in 35 other states, but they provide those documents, and California's does not.
If you're suggesting the law that should be changed, I'm not arguing against that.
A PR firm representing the Fair Plan declined our interview requests, noting in a statement its plan of operations must be approved by the insurance commissioner and stressing that the Fair Plan's meetings are private, and they had no further response. Should it be legal that I don't have access to the Fair Plan's financials, yet I'm on the hook for their debt?
It should not be legal, and it's not right.
So we took our questions to Insurance Commissioner Ricardo Lara. Now, none of the bills that you're sponsoring thus far directly address that transparency issue. Lara is sponsoring a bill that would add 2 California lawmakers to the Fair Plan board, but it wouldn't increase public transparency.
This is just the beginning. You're absolutely right. The Fair Plan needs to be more transparent.
Can you commit, when you come back and sponsor legislation before the end of this session, that it will in fact require that the Fair Plan is at least as transparent as its member companies?
100%.
Following that interview, the Fair Plan agreed to voluntarily increase transparency, publicly disclosing third-party financial audits. And while they still won't say who is on the Fair Plan board, we now know which insurance companies the board members work for.
It needs to be accountable.
Meanwhile, Helen's still waiting to hear from the Fair Plan about her smoke damage claim.
But I haven't received a penny.
And she's bracing for the added Fair Plan charge that we'll all soon see on our insurance bills. But at least now it'll be a bit more clear how the Fair Plan is spending that money. Now, keep this in mind. Increased transparency from the Fair Plan now is voluntary, and there's still a lot we don't know. The only way to actually require that transparency from the Fair Plan is to amend California law.
Meanwhile, the state's insurance commissioner says we need to come up with creative ways to get insurers to write more policies and to bring our premiums down.
Insurance touches every sector of every part of our economy, and climate change is really upending every bit of that.
And one of the ways Ricardo Lara has suggested doing that is with what's called parametric insurance, which pays claims based on the level of a disaster rather than the value of the loss. So payouts would be determined by the severity of the fire or weather event, regardless of the amount of damage to a home. For policyholders, some could get money for their losses that they didn't incur. Others might find their payouts fall short of the cost to rebuild. Parametric policies are attractive to insurers because their costs would be more predictable.
So that we provide coverage for more folks.
Laura says if more insurers return to offering new policies in California, competition will increase and premiums will decrease. But consumer advocates say parametric insurance could leave homeowners without the funds to rebuild.
And we recently hosted a town hall with industry experts, consumer advocates, and community members.
Yeah, we covered a range of topics, including the frustrations that homeowners are facing when a catastrophe strikes. Joy Chen with the Eaton Fire Survivors Network spoke to us about what she's seeing at the ground level.
Thousands of families are sinking every day into ever greater financial ruin, not because of the fire, but because of the failures of their insurance companies to fulfill their contracts. That's not all companies, just some.
We also read questions that we got during our phone bank. More than 500 of you called in just 3 hours. CBS LA anchor Pat Harvey read one of those many questions to Tony Signorelli with the California Department of Insurance.
Robert sent us a question. He wrote that he is a State Farm client, outraged that insurance costs are going up every year, and he asked this: when is it going to stop, and what can a consumer do right now?
I'd like to know that too, Tony.
Well, I mean, as we've been talking about, I mean, the rates and the premiums are going to be based on the risk that the particular insurance company has and their history of their claims. And so it's going to stop and it's going to level off once the risk goes down and it levels off, as well as competition increases.
Now, little changes can go a long way to make homes safer from fires.
Now, one man's efforts got him off the FAIR plan. Coming up.
The rising insurance costs and our better understanding of the coming concerns, this is absolutely a rising issue for customers.
Plus, how the real estate market is reacting to the growing climate risks and insurance industry changes.
Build back better and harder. That's the message from a nonprofit helping people recover from fires. California already has strict building codes for properties in fire-prone areas, but experts I've spoken with say we need to do even more, because we can't stop the danger, but we can build our homes so they're less likely to burn. And for one man, it paid off.
Because if this house catches on fire, it's going to be quite a bit of heat coming this way.
Jay Lopez is a retired LA County fire captain and a homeowner in Altadena.
2009, the station fire burned all the way down.
His hillside home has escaped two major wildfires, the Station Fire and the Eaton Fire.
It is a precious possession for me. This house is valuable for the family. We wanted to preserve.
In order to preserve his most expensive asset, Lopez remodeled it to be fire ready. He took me, members of the nonprofit After the Fire USA, and Eaton fire survivors for a tour of his home, pointing out the steps he took to harden it.
Why are you sharing your home with us?
It's important to work as a team. So one home by itself is the start, but it's more property owners, especially adjacent to each other, do the work. The resiliency of that community increases tremendously.
Lopez estimates he spent between $70,000 and $80,000 on improvements, such as closing the eaves around his roof line, sealing all the cracks like the space around his garage to keep embers out, switching out all vents for ones with smaller openings, just 1/16 of an inch, with a baffle vent, which looks like this.
So the embers get in, it's in here, they bounce around and they become even smaller and fall apart. So, but also by being baffled, you don't have flames going through either.
Lopez also has a 5-foot clearance around his home, cutting back tree limbs and removing bushes. Even his entryway mats are fire resistant, metal, not fabric. He added a brand new roof with thicker insulation to promote better cooling and heating. Cement board, not wood, sits on top of the fascia around his roofline. And Lopez put this stainless steel mesh around his property in case a fire starts at a bordering home.
It takes all of the embers and about 40% of the flames.
Lopez did such a good job at making his home fire ready, he was given an award by the Insurance Institute for Business and Home Safety. Even better, he was able to get off Fair Plan insurance.
Private insurance group contacted me. Hey, we're in your neighborhood, invited them, look at it, and with the work that I have done, got me out of Fair Plan.
And Lopez's neighbors are watching. Io Wright is an Eaton fire survivor.
My home is gone and a rental property that I both just remodeled with my hands. Eviscerated.
Seeing what you saw here today, how does it make you feel?
That it's doable, that it's achievable, that there are really practical steps that you can take, not just when you're building from the ground up, but when you're just trying to do retrofitting. It's achievable.
Jennifer Gray Thompson, founder of After the Fire, says this kind of construction needs to be our new normal and a neighborhood-wide effort.
If there's 10 homes that do it, it's much easier for the insurance companies to come back in and say, okay, we see what you've done here and you will be rewarded for that. We will then insure you. We have to build back here very insurable, very resilient. And really there's an opportunity though to become a model of insurability, to go way beyond what has ever been done in any other mega fire community before.
And you don't have to spend as much as Jay did. The 1/16 of an inch vents that help keep those embers out, they're less than $10 each. Even if you just replace all of your old vents, you're making progress. And still ahead, we'll have a look at how the Northern California town of Paradise has rebuilt after their devastating fire. Julie?
Thanks, Christine. Well, the insurance crisis and climate risks from wildfires to landslides are having a significant impact on the real estate market. Zillow recently added climate risk scores to its listings. Before the LA fires, 80% of Zillow's new listings in the LA metro area had significant heat risk. 70% had air quality concerns and 27% had major fire risk. Now, to calculate this climate risk, Zillow uses data from the nonprofit First Street Foundation.
We build a number of different climate models, flood, wildfire, we have a wind model, a heat model, and we also have an air quality model. We actually take high resolution data to actually satellite data to understand, are there trees within 30 meters of your home? Are there bushes within 30 meters of your home? We actually have a defensible space metric as part of our calculation.
A recent analysis by Redfin found that more than 34,000 people have moved out of high fire risk areas in California over the last year. And as insurers stop renewing policies, more people are getting forced into the FAIR Plan.
Still ahead, why you could be next.
Completely ignoring the fact that there's soot, ash, char throughout the inside of the home.
Claims of being treated unfairly by the FAIR Plan, why some say dealing with the insurer kept them from moving back home.
California's insurance of last resort is supposed to be for homes with high wildfire risk. But it turns out people in low-risk areas are being forced onto the FAIR Plan too, and you could be next. Our CBS News California data analysis found that the vast majority of people on the FAIR Plan live in areas that the insurance companies classify as low fire risk. Even the experts were surprised by what we found when we crunched the state's data, and it reveals that the state's solution to get people off the FAIR Plan may not be enough.
I love it, baby. I love it.
I do too.
For Ken and Lisa, their new house in West Roseville is the dream.
But hopefully we can get insurance.
I know.
That's quickly becoming an all too common nightmare.
Yeah, hope to God.
When Lisa called to transfer their insurance to the new house,
they said, I'm sorry, you're denied. And I was in shock. I thought, are you kidding me? He's been on their insurance for 30 years. And we've never had any problems. We've never had any claims.
And they're only moving 3 minutes away.
I was so surprised. I thought they were making a mistake, actually.
But it's no mistake. Turns out Lisa and Ken's insurer is among several major insurers that stopped writing new policies in California, meaning they're struggling to find an insurer for their new home, and the people buying their old home can't find insurance either.
Most people have mortgages, so they have to have insurance with that mortgage.
The only options? A risky, unregulated out-of-state insurer, or the California Fair Plan, the state's insurance of last resort, which is expensive and doesn't cover much.
It's just a frightening time to be buying homes, living in homes. Even renters are going to have their problems.
The Fair Plan was intended for homes with high wildfire risk, but a CBS News California data analysis finds most of the homes on the Fair Plan are in the lowest risk zip codes according to the insurer's fire risk classification, like Ken and Lisa's, which gets just a 0.34 on the insurer's 4-point scale. In fact, we found there are 10 times more homes in low-risk zip codes than high risk on the Fair Plan. And while some are being forced into the Fair Plan because they can't get new policies, others are losing their existing fire policies.
We share a roof, we share this wall.
Like Helen.
The same risk factors.
Her Palisades duplex survived the fire, but just weeks before, she was forced onto the Fair Plan. State Farm renewed her neighbor's fire policy, but not Helen's.
It's totally random.
Why are so many low-risk homes being non-renewed?
It's a canary in the coal mine that there is a much bigger problem going on.
Rex Frazier represents the insurance industry.
Should be asking, why in the world does the Fair Plan have 500,000 policies in it?
Because insurers are non-renewing policies. Why are they non-renewing policies?
Because we have a system in California that has not allowed companies to earn enough money to do business everywhere.
Insurers argue that California's strict insurance regulations have prevented them from charging enough to cover their risk, so they had to start cutting policies. Californians spend on average less for homeowners insurance than people in 19 other states, even though our home values and the costs to rebuild are much more expensive. Now, home insurers are still profitable in California, but a CBS News California data analysis reveals profitability has declined, and insurers rely on profits to replenish their reserves, which are also dwindling. They need reserves to cover claims after big events like the LA fires.
So you're saying if we were paying more right now for insurance, we wouldn't be in this situation?
That's 100% what I'm saying. How can we simultaneously say we're in a changing climate, we have really expensive homes that are built next to a lot of burnable things, and then act like, oh, there's going to be no impact on rates? That's ridiculous.
Well, new regulations will soon let insurers charge more in California. And in exchange, insurers are supposed to write more policies for people on the Fair Plan. But here's the catch. The regulation specifies only people on the Fair Plan who the insurers classify as moderate to high wildfire risk. Remember, we showed you, according to the insurers, most people on the Fair Plan live in low-risk zip codes. So the regulations may not help everyone on the Fair Plan.
I think it's outrageous. The whole point of the regulations were to get people off their Fair Plan.
Consumer watchdog's Jamie Court was surprised by our findings and notes insurers can now pass the cost of the Fair Plan on to all of us.
When you crunch the numbers, as you have, it shows there is no incentive to get people off the Fair Plan.
And there's no telling who might be forced onto the Fair Plan next.
Everybody's at risk. Don't get comfortable with your insurance company right now because they can drop you like that.
Now, this is a rare case where after seeing our data, both insurance industry reps and consumer advocates say that they would support updating the regulation to incentivize insurers to start writing policies for anyone on the Fair Plan. We've shared our findings and our data with the Department of Insurance. Stay tuned.
So what about Ken and Lisa, who we met there? Do they have a path to private insurance?
Well, we're still waiting to see. Ken and Lisa's insurers among several that committed to start writing new policies in California as soon as those new regulations took effect, which was also ultimately the reason, right, that they started allowing insurers to charge more so that they would write more policies.
That, of course, is the hope. So following the LA fires, people whose homes survived were also battling with the Fair Plan. In fact, some of them say that the California Fair Plan kept them from moving back in a timely fashion. The Department of Insurance says the Fair Plan must cover smoke damage, but some homeowners say the Fair Plan denied or undervalued their claims.
The first thing, when I walked in, it smelled awful.
Keith Stoller's Pacific Palisades townhome that he shared with his wife and daughter survived the Palisades fire, but not the ash and soot that came with it.
Like that blew open somehow. I have a door that basically opens to the balcony that had blown open. So there was ash and dust all over the floor, tons of ash and dust all over my bed.
And on his furniture. So Stoller filed a claim with his insurer, the California Fair Plan.
I assumed that they were going to pay. In fact, the first conversations that I had with people there was like, yeah, submit your, information and we're going to do our best to help, give you what you deserve.
But the FAIR plan decided his smoke damage was less than his $2,500 deductible.
So they're just saying the smell is the only thing that you need to pay to get out of your house, and you could get 3 days of a hydroxol machine, and that would take care of it all. As far as the toxic materials, the ash, you got to sweep that up yourself.
So they just want you to kind of get in there, use some elbow grease and clean.
That is exactly what they are saying.
Stoller didn't like that answer, so he paid out of pocket to have his house tested for toxins. The preliminary report found unsafe levels of lead and lithium. The testing company recommended intrusive and substantial remediation, including removing all insulation in the attic and crawl space.
What are the quotes you're getting for cleaning your place?
$26,000 to $28,000. I've gotten 3 quotes right now.
Does the FAIR plan have to cover smoke damage per California law?
We asked insurance expert Carl Sussman, and his answer is yes. And he says it goes back to a hearing in the summer of 2022.
Where the Department of Insurance went and looked at the California FAIR Plan's claim handling for smoke damage claims to prior years. They found that they were not in compliance with California law, so much to the extent that they made them go back and reopen 59 claims and pay them.
The insurance commissioner told the FAIR plan to update its policy language to properly cover smoke damage. But state lawmakers say that hasn't happened.
They have their sort of an interpretation they're trying to use, but the CBI, the Department of Insurance, has come out with a directive basically to say that they believe that the FAIR plan has been actually violating state law by enforcing this improper standard of smoke damage with its policyholders.
You can see I'm not comfortable being in here without PPE.
Blossom Wright has the FAIR plan for 2 rental units next to her home in Pasadena, just on the border of Altadena. She says she was told her smoke damage wouldn't be covered by the FAIR plan, other than changing the insulation and HVAC system.
Just completely ignoring the fact that there's soot, ash, char throughout the inside of the home with toxins that you cannot make an assessment on by looking at.
And so what does the FAIR plan expect you to do?
They seem to be taking the position that homeowners should clean this up themselves, that it's not damage, it's just something that has to be cleaned, which is totally crazy to me. This is likely lead amongst other items. It's contaminated.
What's a consumer to do when they're told, sorry, not going to cover it?
Well, the first thing is to speak to someone that you trust, other than the claims adjuster. If you're working with an agent or a broker, talk to them and say, this doesn't seem to make sense to me. They're telling me that it's $400 or $800, and I'm getting estimates that are, in the tens of thousands. What do you think? And push back, because as consumers, we really do have a lot more power than we think we do.
State Senator Ben Allen says it's difficult to police the FAIR plan because it isn't a state agency, even though it was formed by the state back in 1968.
And so we don't have the kind of same direct control over them that we do over a typical government agency. And I guess it sounds as though they're trying to take advantage of that. Again, unacceptable. So we're just going to have to ratchet up the pressure on them and hold them accountable.
In a statement to us, the Department of Insurance said all insurance companies, including the California FAIR Plan, are required by law to adopt and implement reasonable standards for processing smoke damage claims, and that it is not reasonable to deny a smoke damage claim without conducting an appropriate investigation. But Stoller and Wright say they worry in order to feel safe, they'll have to pay for the cleanup themselves.
It just really feels like an example of tell everybody no, push back, and then only give in when the chorus is loud enough that we have to act.
If your claim was denied, the Department of Insurance wants you to file a complaint so it can investigate. Lessons from Paradise, resilience and fire-safe rebuilds.
How homeowners brought their town back to life and managed to get more affordable insurance.
We are alarmed if communities cannot rebuild.
And looking into a crisis of underinsurance, what one report says could be causing problems for homeowners. Seven years have passed since the Northern California town of Paradise was decimated by fire.
Today, the town is largely rebuilt, but in a way that can better withstand another wildfire.
We've come a really long ways.
Jen Goodlin is the director of the Rebuild Paradise Foundation. Paradise, California gained notoriety in 2018 during the devastating Camp Fire. When Jen was growing up there,
we were a heavily wooded forest town. Beautiful. Millions of trees with homes plopped in there, and now we're not that.
90% of Paradise's homes were lost in the fire. Now, 6 years later,
we are growing like crazy. We are the fastest growing town 3 years in a row in the whole state of California.
For that to happen, the landscape had to change.
Not just 90% of homes lost, but we lost our canopy.
In place of Paradise's tree canopy of the past, fire-resistant landscapes are everywhere.
Our town has created an ordinance that you actually cannot plant next to your house.
The ordinance was triggered by an economic reality in recent years.
My insurance rate went up 600%, and there's no fuel left. I have a home built to the highest code. I don't have any plants next to it, and I was just so frustrated. I know we live in a high hazard area. That's never going to change, but if I'm reducing my risk, there should be some give.
Since several of Jen's neighbors had also taken similar precautions, Jen invited Mercury Insurance President Victor Joseph to visit Paradise. She had questions.
Please tell me, after you see homes surrounded by rock, all of the measures we're taking, can you tell me why you won't insure here?
Jen was convincing.
He saw the measures that our community was taking, not only the homeowner, but the town, the Fire Safe Council, all the layers of protection, and he started writing policies that day, getting people off of the FAIR plan.
Jen's insurance bill dropped by $4,000.
I think we see each other's enemies, insurance and, you know, the homeowner, and it's just the wrong way to see it. Like, we are not at odds. They want us to reduce our risk. I also want to. I don't want my home to burn down.
For neighbors who prefer the forested landscape of the past,
there's still a sense of choice, I guess. Like, you could keep your plants there, but you're going to be on FAIR plan. The more people who, you know, start following these standards, the more insurable we actually become.
Jen also says the best way to lower your insurance bill is to work with your neighbors to reduce community wildfire risks. Then invite those insurers to come and see what you've done.
It's a great idea. Well, another problem we're finding is that many, if not most, homeowners are underinsured, meaning they don't have enough insurance to rebuild. Elise Preston introduces us to an Altadena woman who learned too late that her insurance won't even come close to covering the cost to rebuild her home.
Gutted and charred, Gail Jimenez's Altadena home is just a shell of the life she curated.
I was this close to paying off my mortgage.
The January fires destroyed thousands of homes. Ever since, Jimenez and her husband have been fighting with their insurance company.
To them, we are a faceless policy number. The amount of dwelling A coverage does not even begin to cover what is needed to rebuild in Los Angeles.
How much are you underinsured by?
We would need another $650,000 to $700,000 to add on to what we're receiving to be able to rebuild.
She's not alone. The advocacy group United Policyholders reveals more than half of California wildfire victims are underinsured. A San Francisco Chronicle investigation shows the algorithms most insurance companies rely on in the state could be faulty.
We are alarmed if communities cannot rebuild.
A California State Board began to address what it calls a crisis of underinsurance. Vice Chair Sally Lieber.
The data that is fed into the algorithms is in some cases woefully out of date. Some of the insurers have told us it's the fault of policyholders, and it is not the fault of policyholders.
But she says homeowners should pay attention to the details of their coverage and the true cost of rebuilding.
We just don't know at this stage in life if we can take on a rebuild and if we want that debt hanging over us.
The company that produces the algorithm tool has not responded to our request for comment. Elise Preston, CBS News, Los Angeles.
United Policyholders Executive Director Amy Bach was also at our town hall, and we asked her about the ever-evolving marketplace and possible solutions to the insurance crisis.
Times have really changed. The market that we have today does not look like anything that we had ever seen. So we are in a time of great change. But I think that we're rising to the occasion. I think the people who have the good intentions to bring solutions, things like hybrid government-private, right? You know, the the property insurance system is provided by for-profit companies. There are going to be limitations to what they're willing to do, who they're willing to insure, and government has to be part of the solution.
Now, we also asked industry experts what exactly homeowners and renters definitely need on their insurance policies.
There are some basic things that I think everybody wants to be sure they have. Fire insurance is definitely one of them. No matter where you are in California, and we'll talk to people that say, I'm not in the hills, there's no fire. The house can burn. Believe me, fire insurance is the primary peril. It's the #1 peril that's been around the longest. Properties burn. So fire insurance is one you definitely want to be sure that you have.
So Julie, what was your biggest takeaway from that town hall?
You know, I think it was just how important it is for folks to file complaints with the Department of Insurance. People just expect that they can fix things or do things, but until you've actually filed your complaint and you've documented the case, they can't even take action. So I think that's really important.
I think for me, it was that we as homeowners have to do our part, that we can't just have insurance and then rebuild our homes, that we have to do things to harden our homes, both to keep them safe, but also to keep our insurance costs down so we don't continue to see our premiums skyrocket.
Yeah, really important.
So as part of our investigation into the insurance industry, we sat down with one of the state's largest insurers to discuss the future of California's insurance market. Mercury Insurance CEO Gabriel Tirador was recently in Long Beach to attend the Global Sustainable Insurance Summit. Mercury is based in Southern California and is the 3rd largest insurer writing homeowners policies in the state. It recently had a 12% rate hike approved by the Department of Insurance. And back in July, Mercury's own reinsurance, which is an insurance company's way of transferring some of its risk to another insurer, was up for renewal. Now, if those rates go up, Tirador said the cost will be passed along to consumers. Tirador claims he understands Californians' frustration with rising insurance rates, but he also says the homeowner has a responsibility to make their homes more fire resistant.
There are folks that think that they live 2 miles down from the wildland area and they're not exposed, but look what just happened in Altadena. So it's really about trying to mitigate risk so that the prices ultimately can come down so that insurance can become more affordable.
Tirador also says the more homeowners harden their homes to lower the risk, the more discounts they can offer.
Well, the FAIR Plan problems aren't new, but now everyone's paying attention.
Why it took so long for lawmakers to take action and what those actions are.
So what you're seeing here is about 80% written by AI.
Plus, how one man used artificial intelligence to get more insurance money for his parents.
Well, as Californians, we've known for years that the insurance market here is a mess, but it really took the LA fires and the magnitude of destruction to get lawmakers moving. Now the question is, will any of their plans actually work? Are we any closer to a fix? And why has it taken so long for lawmakers to take action? We went to the Capitol to find out.
I can still just melt hearing the sound of the creek and breathing in this redwood air.
It was a fixer-upper in the Santa Cruz Mountains that Sarah transformed into her dream home.
It's so special.
But her dream of being a first-time homeowner,
it's also
turned into a nightmare after the CZU Lightning Complex fire in 2020.
Pretty traumatic.
Not because the fire destroyed the homes around her.
What they put me through.
Because of how she says the FAIR Plan treated her.
They almost made me feel like I was going crazy.
Like many whose homes survive a wildfire, Sarah's was filled with ash and soot and potentially toxic remnants of all that burned around her.
I think a lot of people assume it kind of smells like a campfire. It smelled rancid. It almost was kind of sour.
But according to court records, the FAIR Plan refused to pay to remove the toxic materials so she could safely move back in.
One of the adjusters on my claim, Chad, told me to Swiffer.
Sarah's story is all too common. 4 years ago, the Department of Insurance told the FAIR Plan its denial of smoke damage claims like Sarah's was illegal. The FAIR Plan disagreed.
Your response was completely inappropriate and dehumanizing, and it felt awful.
2 years ago, Sarah testified at this FAIR Plan Department of Insurance hearing.
And none of you will look at me, and that is awful.
And little has changed.
But I haven't received a penny.
The FAIR Plan is still using the same language to deny smoke damage claims for LA fire victims.
All of the attic insulation has to be removed.
Like Helen.
It's a canary in the coal mine.
From the insurance industry spokesman to the former insurance commissioner.
Insurance is basically the canary in the coal mine.
Everyone we've interviewed acknowledges that FAIR Plan problems are a symptom of California's worsening insurance crisis. The FAIR Plan has more than doubled in size as major insurers stopped writing new policies in California.
It was shocking that they said they wouldn't insure this house.
And now anyone can be forced into the FAIR Plan. As our CBS News California data analysis recently revealed, most homes on the FAIR Plan are in the lowest risk zip codes according to the insurer's fire risk classification, like Ken and Lisa.
Everybody's at risk. Don't get comfortable with your insurance company right now. They can drop you like that.
I was non-renewed and it happened to me.
State Senator Susan Rubio has been chair of the Senate Insurance Committee longer than most state lawmakers have been in office.
In the last 7 years that I've been chair, we were not having the types of discussions we're having now. The appetite wasn't quite there.
She says the LA fires changed that.
Now everyone wants to talk about it. They want to come to the table, and I think it's a good thing.
Lawmakers introduced nearly a dozen bills that directly reference the FAIR Plan in just the first 3 months of the year, double the number introduced in the entire last 2-year session. The bills would do a variety of things, ranging from authorizing the state to loan the FAIR Plan money to trying to increase transparency of the FAIR Plan's governing committee.
How do we depopulate the FAIR Plan?
Rubio believes the key to fixing the FAIR Plan is to get people off of it, which requires incentivizing insurers to write new policies, most likely by allowing them to charge more.
We don't have a perfect solution at this point. We don't. But we do have a lot of great ideas that I think that could eventually turn into good policy.
But eventually is a long time to wait for people like Ken and Lisa, and for Helen and Sarah, who spent 4 years fighting the FAIR Plan.
I expected them, my insurance company, to restore my home to what it had been before the fire. And they refused.
She ultimately paid out of pocket to basically gut her house and make it livable, but she couldn't bear to move back in.
So this process was so traumatic for you that you don't want to be a homeowner anymore?
Especially not in the state of California.
The FAIR Plan eventually settled with Sarah. There was no legal precedent set in her case, but her attorney then filed a series of unique FAIR Plan smoke damage lawsuits on behalf of LA fire victims. They're suing not just the FAIR Plan, but also the private insurance companies like State Farm and Allstate and Nationwide who run the FAIR Plan. Interestingly, the outcome of those lawsuits could actually have a greater impact on regulating the FAIR Plan than any of the proposed legislation.
Julie, an elderly couple who lost their home in the Eaton fire was having trouble with their insurer until their son stepped in. He used artificial intelligence to help fight for more money, and he won. He said it didn't cost him anything besides a few hours. And just a note, we agreed to not share the name of the family's home insurer because the fire victims feared retaliation. The first trauma was losing the family home in the Eaton fire.
It was very emotional for them because there's very little left.
The second trauma, Dennis Salguero says, was dealing with his elderly parents' home insurance company.
Some adjusters would only be assigned to our account for like 3 days. They'd tell us one day that they were our new adjuster, and then 3 days later, they'd say, nope, I'm not your new adjuster.
Salguero says the final adjuster came back with a rebuild estimate well below the market average, leaving his parents, both retired teachers, underwater.
So the difference was well into the 6 figures. And that's where we thought, well, we have to do something about this because there's just no way we can rebuild for what they were offering.
So Salguero decided to use his background as a data scientist and utilize artificial intelligence to push back against the insurance company.
Well, the beauty of AI is that basically every document, every professional domain is open to you. So I may not be an insurance adjuster or a construction expert by trade, but I know that that information's out there.
Salguero used multiple free versions of AI to draft an appeal.
I had ChatGPT give me a basic document. Like, what are the arguments you would make here? What are the estimates you would make here? I took that document, I showed it to another engine. In that case, it was Grok by X. And that engine was able to say, good document, but I think on this line and this line and this line, I would change the values.
This is that letter.
So what you're seeing here is about 80% written by AI.
It includes multiple models with estimates to rebuild, complete with a line-by-line breakdown of costs.
How did the insurance company react to those documents?
Silence. But that was also a good sign in my view.
Salguero assumed they were taking time to review it, and he was right. Within days, he says the insurer came back with a payout that was more than $150,000 greater than their original offer.
They essentially said that they agreed with the documentation I sent them.
When I asked Salguero how that felt, he was overcome with emotion.
Because it's for my parents. It wasn't for me. I mean, I just happen to be good at this stuff.
These are my parents up on the screen.
Now Salguero is sharing what he learned.
I want to use this as a teachable moment.
With his thousands of followers on his Data Science with Dennis social media pages.
I hope it makes people feel empowered to do this, because I think it can be very intimidating to go up against an insurance company and fight for what you've been paying for, right, for what your coverage is. And it should also make people feel like they don't have to be an expert in all of these items. They just have to be able to accurately describe to AI what it is that they want to accomplish.
Salguero's parents have decided to sell their land, but he says the extra money AI helped them secure will go a long way as they decide where to settle. He also wants people to know that AI can help with any insurance issue, from health insurance to car insurance disputes.
I understand why algorithms are important and automation and all these other things, but there's real people behind those decisions. And it's disappointing to see companies forget that.
Salguero said AI can also be a useful tool as fire victims inventory their loss. He says you can input a photo of, say, your living room or your bedroom, and then AI can generate a quote for what your belongings are worth. You can watch his videos on his social media for free.
Well, thank you so much for watching our CBS LA special Home Insurance Crisis. We've got you covered. I'm Julie Watts.
And I'm Christine Lazar. And for more information and insurance resources, just go over to our website, cbsla.com/insuranceHQ.